In this video, traders, we're going to look at stress testing your trading strategy. Stay tuned. Hey guys, well, welcome to you. Alright, so we're not talking about stress testing your hedge fund portfolio here. We're not talking about sitting there and doing what happened with this, what happened with this. We're talking about day-to-day retail trading. We're going to have a look at some of the things that we could potentially pretend would happen and see if our trading strategy would survive. Now, one caveat, guys, before we run through these obvious ones, most of them are obvious, some are not so obvious, is that I don't think we can allow for everything. Right? There are going to be times when you have to accept some significant tail risk that probably will never happen but could. And now it could happen in your favor, it could happen against you. I think most traders who trade the markets recognize that there is significant tail risk out there. There could be an odd anomaly, but this goes down, that goes down, this happens, that happens, that means that it really hammers them. Now, of course, if you're trading with ESMA in the EU and you're trading CFDs as a retail trader or spread bet trader, then you don't have to worry about that because at the time of filming this, you've got the negative balance protection. And if you want a spread bet firm to check out, have a look at our channel sponsors, guys, in the description below. So that being said, what about if we stress test our strategy for normal things that could be expected? So we're not going to get wiped out by these supposedly 3 sigma events seem to happen every other week. So let's have a look and see what happens. So the first thing is, the obvious one is what happens if volatility suddenly goes up or down. So if we're trading and there's things sticking in a sort of 50 pip range, all of a sudden it goes to 300 pip, how is our strategy affected? Do we have an adjustment that allows us to decrease our size? What about if we're already in a trade? Now, it might just stop us out on one trade, but is it going to trigger another trade? We're going to have another entry. You know, how does it affect it if volatility changes? And if we're swing trading, sudden volatility change, do we have some kind of parameters and variables with our strategy that allows us to dial down that risk should we get into a situation where volatility starts to get crazy? And the same with the compression. It's not going to end up killing us, but if we perhaps it would do if we're trading options, and potentially we're trading with selling premium, then that may not work so well in a compressed volatile environment. So just watch out for that. Okay, the other one, which is a big one, really is the main one, guys, that we all think about, is the extreme quick move. So how much size are you trading? What kind of time frame are you trading, etc.? Because the danger for this is the shorter time frame you're trading, the more danger you're at. Because if you're scalping, you're trading aggressively, you've got big size, you're looking for small movements. If you get that, you're going to be in big size, it's going to be a big movement. It's not going to affect the swing traders so much because unlikely to be huge movements because you're relatively muted position size. Still effective though, some people after earnings or something, big heavy move, but you've got time to adapt it. We're talking about, you know, that's your decision to stay, not unless it's a gap, if it's moving quickly, because you're going to be able to get out as a swing trader. This is more like, okay, I'm scalping for 15 pips, 10 pips, 5 pips here and there, blah, blah. All of a sudden, bang, you're in full size, goes against you. You know, that kills gains for the past 2 weeks. So, you know, if that happens, what can you do to stop that? Have you got an emergency stop in place? How will your system or strategy weather that kind of thing? A news flow. If news flow changes, then will the strategy be able to deal with, you know, because if you think about, like, you know, we get big moves when it's on news, it doesn't necessarily just go bang quickly, unlike the Swiss National Bank thing, which went bang quickly. Very often the news is filtered out slowly. So if it's bad news and we start to see running down in price in the market or running up in price in the market, if you're trading a inversely correlated market to positive news, you're going to see that. So you have time to get out. So is the strategy able to do that? Are you not going to be trapped in? The other thing is liquidity going thin. A big one, obviously relative to how much size you're trading, but also if you're trading a spread trading strategy. Let's say you're trading short S&Ps, liquidity has to go really thin for that. But let's say you're trading, you know, short FTSE against a long Euro stocks or something, or long DAX, for example. Liquidity going thin could affect you. You might have to get out of a position. Maybe more so for stocks. If you're trading stocks like the lower tiered stocks, less volume stocks, you might find the liquidity is super high when you're in it because all the earnings are out and everyone's interested, but then that dries up. How can you get out of position? If you've built a big position in it, a relatively big position for you, and you can't get out of it, you're going to be screwed. I remember years ago trading cotton directly on the exchange. and it was a 5-month cotton. I don't even know why I was trading this. I ended up being in a position I couldn't get out of. The spread was massive gaps all down the order book. And yes, it was my own fault for getting in. It wasn't a common thing to me to be doing, but I just ended up making a mistake. And you know, sometimes you've got to realize, actually, you know, there are times when you just can't get involved in it because if liquidity disappears, you just can't get out. And this is more for bigger traders as well, which is why we get these big moves in the markets. They're stuck in a position, the market's moving massively, all trying to get out the same door, and they can't. Flash crash is a great example of that. So does that affect you? If it does, you need to do something about it. What about your broker blackouts? So these are kind of operational things. If your broker goes dark, can't get hold of him, can't get on the platform, you can't ring through, what are you going to do? Have you got an option for that? You know, stress testing the strategy in your operations is all part of the game. Maybe you go to another broker and quickly put a hedge position on, an opposite position in the same direction, the same instrument or similar instrument or whatever it may be. Maybe you've got a put option, a call option. There's ways to do that. Number 6, correlations changing. This might not seem like a big thing, but if you're trading a pair trading strategy, or if you're trading some kind of proxy strategy, let's say you're trading the DAX against the FTSE DAX, whatever it may be, and then correlations go out of sync, how is that affecting your strategy and decision-making process? You know, do you have a metric that says, well, this is not working anymore, I'm going to stop, or are you going to keep going and keep going, keep going? Why I mention this is you're especially vulnerable when you're trading a pair trade, because if you're trading a ratio, for example, the ratio normally does this, right? And that's why you're making your money. You're shorting up there, you're buying it there. If the ratio starts to break out here, at what point are you cutting it other than going, wow, it's a great mean reversion trade, I'm expecting it to come back in? So understanding correlations changing, and at what point, if you're trading that kind of strategy, you need to cut it and go, right, you know, it's not working anymore. So these are the more dangerous ones. The extreme quick move, I think probably resonates with many people watching this. Scalpers, short-term traders. I've been caught out by extreme quick moves before when scalping. Hurts, stings. Sometimes it works in your favor, but you don't want it so bad that it's going to wipe you out. Accept it's going to happen from time to time, but how are you going to deal with it? Make sure it's not going to absolutely kill you, but if you give back a bit of profit, you can live another day. How do you fight that? Stress test it and say, if it moved X amount of pips now, instantly, what would happen to me? That kind of stuff. So there's the big one, guys. Extreme quick move. The other ones there, depending on your trading strategy and style. All right, guys, stress testing your strategy. See you next one. Take care. Bye-bye.